one night in the Middle East changed LNG markets for many years to come.
Yep.
You know what
Today
that
we're
was, Brian?
Well, I do, unfortunately. One night of missile strikes on Qatar's Ras Laffan LNG export facility changed an anticipated surplus in LNG to structural deficit. What we're going to do is we're going to break down where we are going, and what we might be looking at going into the future. But it is very clear Qatar was set to expand over 50%, I think 70% of their LNG. They were going to add 70% to what they currently are exporting and be one of the largest global exporters, which they historically have been. So what we're going to talk about today is we're going to talk about what's happened, where we've been and where we are, and then where we're going. So in the pre-crisis outlook, analysts estimated about 35 to 37 metric tons per annum of LNG supply in 25-26 to create a glut. And Asia prices forecasted at $9 to $10 per MMBtu. And prior to the Middle East conflict, where the U.S. attacked Iran, prices in Asia and in Europe on LNG were around 10 to 11. Then,
So, Brian, when you're doing a project, you also look at all the risks that are out there. That's part of the deal. I've done this many times. You look at all your risk. I do not believe Qatar had a missile strike on their risk assessment for their project on the expansion of LNG.
no, that was definitely not on the risk assessment. And these projects cost tens of billions of dollars to
Exactly.
complete.
Yes.
These are very large investments. And so, by the way, for those that don't know who we are, Brian and Bill with Energy Rogue, we've been in the energy markets I've been in the energy markets over 3 decades, Bill a little bit longer, and we have traded natural gas, crude oil, refined products, electricity, any energy product that there is, we have traded it, we have moved it, we have built infrastructure for it. So the one thing that we're bringing is infrastructure knowledge, knowledge of the markets, and knowledge of the past of what may happen to the future if history repeats itself, which it does often. Well, actually, no, I like the quote, history doesn't repeat, but it often rhymes. So
Yeah. I put it like this: people often make the same mistakes because they don't pay attention to people in the past.
yeah, that's right. It awfully rhymes. So we're taking a look at the history. So prior to this crisis, JKM and TTF prices were around $10. Let's call it 10. It was sometimes 11. Then in March, strikes on Ras Laffan cut 10.2 BCF a day, that were converting that to from the metric tons per annum to BCF a day so we can compare it to US exports. This is comparable to Russia's 8 BCF a day loss in 2022, and the repairs are expected to take 3 to 5 years.
And they'll take
And
3 to 5 years if they choose to repair them. This is going to put a, when you add this line item into your risk profile, that could change what's going on.
well, and bear in mind, they are underway on an expansion plan over the next 4 years that was almost going to double the size of their export facility. So there may be some ways that they can mitigate that, use some of that new infrastructure to get this back online. Don't know. It's way too early to actually understand. But
Right.
demand is exposed now. The EU storage is only 29% full versus 39% last year. Now, last year we had a very, very, very mild winter.
Right.
So there's about 700 cargoes they need to refill, and fierce competition for every cargo. Right now, TTF and JKM are bidding against each other because most of Qatar LNG, 90% goes to Asian markets, 10%
Right.
goes to Europe. But this puts the U.S. in the spotlight. which ironically is bringing on Golden Pass. Golden Pass is partially owned by Qatar. So they own an export facility in with Exxon, if I got my ownership right.
Yeah, I believe it is
Um,
Exxon.
yeah, I think it's Exxon in Qatar, and it's called Golden Pass LNG. They just started up, and I think they're at 25% capacity right now. Probably in the next 45 days, they'll be at 100.
And
That's
most
going
of
to
that
take,
capacity is already spoken for.
yeah, when these projects are done on export facilities, people buy the capacity, they reserve that capacity. So when these facilities are built, if that capacity was contracted to go to Asia, well, that may not be a help for Europe. So it kind of depends on what that pre-contracts stage was. But this puts the US in the spotlight. 15 BCF a day in 2024. We're now consistently exporting 19 BCF a day right now. And that's before Golden Pass is fully online, which will bring us to 21 to 22 BCF a day. So this is the trigger. That was the past. That's where we were pre-crisis. LNG prices were $10 to $11, and Qatar was exporting a lot. Then the strikes happened. 10 BCF a day dropped offline. And this impacts about 17% of the capacity. And this, Qatar issued force majeure. They lost $20 billion in revenue, and some of the contracts will be impacted for up to 5 years. So this is going to be big. And what we're doing is bringing us up to today, and then trying to understand what does this mean for the future. So 19 metric tons per annum LNG removed, 10.2 BCF a day, 17% of Qatar's output is lost, $20 billion of lost revenue with impact up to 5 years. Now, what does this mean? Beyond LNG, let's focus a little bit beyond on a wider scope. So it didn't just hit the gas. They also torpedoed a slice of the global petrochemicals market and rare gases. Condensate, 18.6 million barrels wiped out, 24% of Qatar's condensate exports are impacted. LPG, 1.28 million tons lost, 13% of Qatar's LPG output. And helium, this is one that speaks close to Bill's heart. 14% of the global helium output is disrupted, plus naphtha and sulfur. What's important about helium, Bill?
So helium, first of all, it's one of the priciest commodities you pull out of the energy business, and there's not a lot of helium. So number one use for helium is in space exploration
Hmm.
because they use the helium to displace the fuel that's in the rockets already. So if they have the to empty a rocket, they use helium, and they use a lot of it.
Hmm.
Number two is medical. That's the number two use for medical is
MRIs, right?
right. Every MRI machine has some helium in it,
Hmm.
and then number three is usually a combination of the um, industrial gases. Believe it or not, a lot of times helium is used to, um, though it's non-flammable, it's used to dilute some of the gases for welding. And then the
Hmm.
other thing is entertainment, which is that. So each one of those though has a different quality of use of helium that you need. And so I don't know exactly what Qatar was doing, but I'm pretty sure they were printing like pure helium, which is 99%.
Ooh.
And so that stuff is, I think the last time I saw it, it's somewhere around 12 or $1,300 an MCF.
In other
And you
words,
just
it's not
don't,
just balloons.
no, it's not just balloons. And when you take 14% out of the market of anything like that, this is going to have a significant impact. So why does that matter? The cost for your MRI is going to go up.
Yep. Well, events like this, cost of everything ends up going up in some way,
Right.
shape, or form, just in different ways. So
And by the way, going back to that, Brian, I think the condensate will come back faster.
Hmm.
I think then the propane will come back faster, but the helium will be the slowest thing to bring back on because you have to get that stuff down to a negative 300, no, probably 360 degrees
Okay. Yep.
Fahrenheit.
Yep. Yep.
Man, oh no, really actually closer to 400 because you got to get down almost in Kelvin degrees.
Mm. Okay. Okay. Well, a lot of analysts, including ourselves, have been looking at the LNG market, and with the rapid expansions in Australia, Qatar, and the US, there was concern we were going to have too much export capacity, not enough regasification capacity. So in 26, 27, we were looking, and we actually talked about it just a month ago, that we in the springtime we may have LNG curtailments out of the US,
Right.
because there may be too much LNG floating out there. So just a few months ago, we were expecting lower LNG prices, and with a lot of new supply being added, and there was warnings. Kepler warned of transitional 2026, but oversupply, and traders were bracing for a lot of surplus. Well, now there is no surplus. We went from surplus to shortage overnight, just like that. So Laffan is a very, very big impact. So
Yes.
you're, oh, go ahead.
I was just going to say also, this may be where Qatar loses some contracts for a much longer time than 5 years, because other
Hmm.
people will fill those contracts and they will try to their best to hang on to it. So it's going to be get very competitive if Qatar can bring their LNG facilities back on.
Well, and it's actually a great point, because at the center of this is also Europe. Where does Europe get
Right.
their LNG? They get about 10% from Qatar. They get about 60 to 70% of the US exports. So they get most of the US exports already today. So that means there's not a lot of extra spare capacity to send that way, because the other 30%, 25% is going to Asian markets, South American markets, other markets. Now, this is where price competition comes into play between JKM, which is Japan
Right.
Korea marker, and TTF, which is the pricing anchor for European LNG. But a midsummer spike looms as Asia draws on stored gas and Europe races to refill. So I think prices are going to be underpinned. And I know we talked about it at the beginning. Pre-crisis, LNG prices were 10, 11 per MMBtu. Now they're 17, 18, 19,
Right.
sometimes 20 plus. So in some cases that it's doubled, but it's at least up 70, 80%. So prices are firmly up. That means Europe is going to be paying a lot more for electricity, a lot more for natural gas. Japan, Korea, going to be paying a lot more for electricity, a lot more for gas. So Asia does have a little bit of buffer, but it's not immune. China, they've been they've been filling their storage pretty well on the crude and the natural gas side, but they're 51% as of March. South Korea 56% full, and India faces unexpected shortages because India was getting a lot of LNG from
Right.
Qatar. So,
So the main thing that in these three particular indicate is that they do not have a large domestic natural gas resources
mm-hmm,
that they've been able to build infrastructure around. I think
yep,
they may have the resources, they just don't have the infrastructure. And so they'll
yep,
have to bring in that natural gas to their coastal cities, which is where most of it's brought into. The other thing that we didn't even mention on this on any of these slides is that we have now seen one Russian tanker, which was uh, in the Black Sea and one tanker here in the Persian Gulf.
So it chopped
Now,
up. You said, what about these tankers? What happened to the tankers?
they had damage. They both were hit by
Okay.
drones.
All right.
So what that does, that takes two tankers out of the tanker fleet. You talk about the tankers that are trapped in the Persian
Mm.
Gulf. Now, not only do you have less supply, but you have less. You've interrupted the infrastructure to get the LNG to places. So I think you can see a premium just on that, because
So,
that was our earlier, what, 3 years ago we were talking about we didn't have enough LNG tankers,
yep.
and they
Well,
were only
and
building about 40 a year. And so when you, I mean, two doesn't seem like a big deal, but when you start talking about, okay, well now it's going to take 6 months just to build one to replace those. So
and essentially, you have Qatar, U.S., and Australia. These are exporting,
right.
right, via the ship. So I'm going to try and draw a little ship.
Oh, please
Um,
don't.
oh, there we go. There we go. That's a ship.
Oh,
And
there you go.
then,
That's old style, man.
yeah, that's old style. And then you have various regas facilities. And so when we're talking LNG, there's actually three different capacity constraint points. One is how much LNG export capacity exists. Two is the amount of ships. Three is the amount of regasification facilities. And you have different projects like ENI off Mozambique is actually doing a huge, massive, not an export facility, but a massive export ship. So they are building a massive ship to do that. So what Bill's talking about is with two ships, which doesn't sound a lot like a lot, two ships out of the mix, now all of a sudden we might have shipping shortages.
Well, you also have the ones that are trapped in the Persian Gulf that are out of the game already
Yeah,
till the straits will
ex-
get opened back up.
exactly.
So you could be
So,
having, and I don't know the full because I haven't seen a uh, separation of which tankers are which in the Persian Gulf yet. How many of them are crude oil? How many are LNG? But you could have as many as 10 or 15 tankers out of the game, and that's a
mhm,
significant amount because you don't just do their capacity; you do their capacity times probably 20. They can do 20 trips in a year, maybe 30 trips in a year.
right.
And so that's how much LNG you just took off the market,
Yeah,
besides not being able to fill in Qatar.
absolutely. And so one thing to mention, we were talking about TTF and JKM that they're priced 18 to $20 per MMBtu. Henry Hub is hanging around 3.
Yeah,
Now
it doesn't
some
affect.
people some people will ask why, and it doesn't affect why, Bill, you were about to
Oh,
say.
because yeah, because the United States has a large domestic natural gas industry. That's why we're mostly exporting our natural gas. We're not really importing natural gas, and so we try to take the, and who takes a bit. And we're going to talk about this. We'll talk about who the winners on this deal. But for the U.S., there are some winners. It's just not as much as possible because they already have long-term contracts.
So you can think about it this way. The US is exporting everything they possibly can physically via LNG exports. So
Yeah,
they are,
roughly we're exporting somewhere around 17 or 18% of our total natural gas production is
yeah,
going offshore.
yeah. And so think about it this way. The reason the price relevance of an increase prior to this, TTF and JKM were 10, $11, and Henry Hub was at 3. After this event, prices in TTF and JKM are 18 to $20. Henry Hub is 3 because there are no more exports. It doesn't create excess demand
Right,
for the US. It just changes where those destinations are, and the
right.
main winners are the people that are selling into the LNG market. So those are the contract holders into the ship and off the ship into regasification markets.
The
So,
people with if they have any excess available capacity, that's who's really winning on that.
yep. And by the way, this research is showing that 18.1 BCF forecast by 2027. We've already blown past through this. Operationally, we're already exporting 19.1 BCF a day, and it's probably going to be 21, 22 BCF a day by May, I would say. But we are coinciding with that. US is producing hitting max levels on the amount of production, and that's predominantly out of the Permian, out of Permian play, and
Right.
capacity is doubling. So projects under construction could double US LNG capacity by 2031. So given Qatar's contraction here, the US might coincidentally be able to soak up that market. So US exporters are the clear winners. US producers don't really see that benefit. If you're
Well,
exporting or you have linkage to sell that molecule, if you're still selling that molecule in the US, it doesn't really matter. Okay, so if the molecules are traded in the US, it won't really matter, but it does matter for players like Cheniere, players like Golden Pass, which is Exxon and Qatar. I bet you Qatar is pretty glad to have at least some access out of the US right now. So so help me walk through the winners and losers here. Now these are arbitrary. These are our choices. So
yeah, this is very on what we see with it. So when we say U.S. LNG exporters, they win on two different things. Any swing capacity they have, they're going to make bigger dollars on than they had already scheduled for it. So if they have the capacity to send 18, let's say they have the capacity to send 2 BCF out, and they've got an extra half a BCF capacity, they can break that up. Well, the 2 BCF is at $10, $11, but the half a BCF is at that $19.
mm-hmm.
And so they're making money on that excess capacity, what we usually refer to as the spot market.
Yep.
So that's one way they're doing it. The other way is that they're now being able to go renegotiate 1 or 2 year contracts into 30-year contracts
Mm-hmm.
because now they've shown that there's some instability in the contracts, and so now they're talking to other people. This is going to be good for the LNG facilities are going to come off and then come on in the next 18 to 24 months, and they'll be able to secure those contracts a lot quicker for a lot longer term because of the relative security of the U.S. And so that's where I see. Did I miss anything on the U.S. side there, Brian?
I don't think so. I don't think so. I mean, I think you laid that out pretty well. Some other winners and losers, Russian renewables are going to be winning here because Europe is probably going to take Russian natural gas supply,
Right,
and renewables are going to continue to develop here. New exporters like Angola, Mozambique, which is E&I's project, they're going to gain market share. So that's going to come at a good time. Spot
right,
cargo carriers with flexible
yeah,
supply, they're going to win.
yeah.
Now,
Anywhere in the world on that, yeah,
some losers, Qatar is losing revenue and reputational damage, as Bill said. Europe, because this puts supply in a trickier spot. Now, what's interesting about this is there's resources in Algeria, which is just across the Mediterranean,
right.
but that hasn't been brought to fruition. So I wouldn't be surprised to see some announcements around that coming into the future. But that's just me looking at a map going, well, that makes sense.
And so when you start looking at 700 cargoes to grasp some concept of that, that would be like one cargo from every LNG tanker in existence, just
Right,
about.
right.
And so that's how big a thing that they do it. They'd have to take that. So that's a significant gap they have to make up. The only chance they got is that they won't need it during the summer, and they can the time is their advantage. That's what they need. They need time.
Right. Right. Um, China, South Korea, Italy, Belgium, Japan.
Yeah,
These are all countries, pardon me, that are going to be impacted by this. Industrial consumers that are
yeah.
facing demand destruction. So the human impact, power, electric power is going to be more expensive. Natural gas for furnace heat is going to be more expensive. So energy bills across the globe are going to be more expensive. Now, here's some open questions. Some of these I have answers for, but let's read them off, and then Bill, I want to get your take. So low market stress, high supply risk. Can U.S. and new exporters fill the Qatar gap? Um, I got my answer. Short answer. My short answer is no. They're going to fall short of
Right.
that gap.
They're not going to be able to do that for at least 24 to 36 months.
Okay. So near term, no. Will force majeure reshape contracts? Yes. Um,
I think this is going to be a huge impact.
yeah.
I think this is going to be, and if you've never been in the contract world for energy products, force majeure is the one out everybody has, and it has a wide array of things that people can call for force majeure. This is going to make things a whole lot different in that if someone goes into what will happen in this prediction is that the force majeure clauses will change is that if someone calls force majeure, the contract, no matter how long it is, even if it's 20 years, can be terminated.
Right.
And that begins to give the provider a lot less ability to finance any build of infrastructure. That's going
Yeah.
to be a real interesting one, I think.
Yeah. I think you're right. Now, in the high supply risk, high market stress, will Europe and Asia avoid gas rationing? I don't think they will.
I think the answer to that is yes and no. I think there'll be some countries in Europe, they will absolutely be doing gas rationing. Same thing with in Asia. There'll be some of them
And when
doing
we
that.
say gas rationing, it could be power rationing.
Yeah.
Uh,
This we're talking about rolling brownouts, maybe some blackouts. Because in case you're not familiar with it, gas is a source for a lot of electric turbines, and that's
hmm
where that comes in. So that's what they're using. They're doing it for turbine, not just heating. And so uh, we could see the old Jimmy Carter thing where we had to raise our thermostat to what was it, 75 degrees in the summer and 68 degrees in the winter.
Yeah.
And so, and he did that. He had a sweater on when he was making that speech. I thought that was interesting. He's pretty good. So, but yes, there will be that. It won't be all over Europe. It won't be all over Asia, but it will be severe in some places in Europe and in Asia. And
Yeah.
so, because when we
Yeah.
talk about European storage, realize that every country owns a piece of that storage. They don't just share it all together.
Right.
And so if you don't have much of your own storage in there in Europe, you will suffer some of that.
Yeah. Definitely. Um, has the era of LNG abundance ended? My answer is no.
No, I
I
mean,
think power
you just,
demand is going to continue to increase reliance on LNG because L, LNG is liquefied natural gas, and natural gas is one of the cheapest
right.
in the cost stack, in the fossil fuels stack. When you compare it to renewables, it is actually a very remarkable cost comparison from the infrastructure needed to convert that to electricity, plus the ability to have consistency with that. But events like this raise that question on consistency the same way that solar raises the consistency of what if it gets sunny or what
Right.
if it gets
Exactly.
cloudy, right?
Well, and
So,
I think also is that LNG is the fastest way for developing nations to get a cheap energy infrastructure while they're developing their own.
hmm
So it's a go fast card for the people in developing nations to be able to create the infrastructure with cheap energy, and we realize that for us it doesn't seem cheap, but when you have a lot in the like the United States, um, we don't understand what the real value of that natural gas is on the global market.
Yep. Yep. So, wrapping up what to watch next, summer storage race. I would
Yeah.
say Europe, Asia, and the US. That is all going to be in play. The US ramp up, watching how fast that goes up. And again, it was projected to be 18.1 BCF a day by 2027. We're already past that because
Yeah.
operational flexibilities have been expanded to where they're able to overrun their capacity right now. And contract loss shifts, that's going to happen. Now, how and where are there amendments? For some of these, are there going to be renegotiations? And will we see another rebound in 2027 of new projects? I think that might be really interesting. So,
I think some projects that were right there on the operating table about to die have gotten some new life poured into them with this, and where they might they might have their economics might improve quite a bit, and that way they'll get to go ahead to go.
yep.
So
And for those that don't know who we are, so Bill and Brian, we run Energy Rogue. Energy Rogue covers energy markets every single day of the week. We go through technicals of the markets, and we're talking energy markets, oil, natural gas liquids, refined products, electricity. We cover fundamentals of the marketplace, technicals of the marketplace, and if you're interested, there's a link below. But if you're interested in learning a little bit more about energy markets, the top link is going to give you access to mastering oil and gas markets in just 5 minutes a day. So if you follow energy markets, that is a free resource for you. And you just have to enter your name and email, and that'll be off on your way. So listen, one thing is clear. This month has taught us the energy markets can pivot very quickly, very dramatically, and staying on top of that for either your trading, your business, whether you're buying the commodity, whether it is oil, natural gas liquids, refined products, selling the commodity as a producer, moving the commodity as a infrastructure operator, midstream operator, and honestly, we welcome anybody who wants to understand a little bit about the markets because
right,
we track those day in and day out. 24/7, actually 25/7. I'm going to say 25.
25/7. Yeah.
Yeah.
Well, then that'd be 25/8.
We're just going to add hours and days then because we
Yeah.
can't
Yeah.
there's not enough hours in the day. We'll just make them. We'll just make
There you
them
go.
up. So, anyway, listen, thanks so much for joining us. If you got any questions, if you got any comments, if you think we're cuckoo, let us know in the comments. So, listen, thanks for joining. That's all we got. Any parting words of wisdom, Bill?
Final words is that just watch out. There's things out there. This energy business can be a lot more fragile than we think, but it's pretty resilient, and it will come back. It will be, so what you want to be able to be is informed, and we can help you with that. We want you to be safe. You have to be responsible for that.
Yeah, yeah. And please be safe. And listen, thanks so much for tuning in, and we will see you next week.